following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Kicking into summer, officially summer. The 21st yesterday. It's a beautiful thing. This is a quote by James Garner. Believe in yourself and everything you can be. Market-wise, let's take a look at it out here. We have the Dow Industrials up 114, NASDAQ up 39, S&P's up 18. When we look at the percentage-wise, this is what you have happening out here, folks. The Dow is up 0.6%, the S&Ps are up 0.7, and the NASDAQ is up 0.7. Over in Europe today, it was a big day, and this is really intriguing watching this whole thing shake out. We had the DAX up 3.8, the CAT was up 3.8, the FTSE was up, the Spain was up 3.8, the FTSE was up 1.7. So coming into this close is going to get really interesting because we are way off the highs at this particular point. Gold contract's down $18.40, trading at $1,183 an ounce. Silver was up 4 cents at $16.15. Platinum down 22 bucks at $1,062 an ounce. You get copper flat at $2.57 a pound. Light sweet crude was up 33 cents, trading at $60.30 a barrel. Bonds. The bonds are continuing to go into lower price. They're going to go after that swing low. The 10-year down 24 ticks, 125.26. 30-year off 2 full points and 5 ticks at 149.24. King dollar's up 238 ticks, trading at the 94.51 area. The euro is down 13 at 113.39, and the yen is up 6.7 at 123.38. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? As we go over to the world of the S&Ps, let's take a look at them. We're going to go into the futures first. So this is what we had happening with the futures out here thus far this morning, folks, and this afternoon. We are right now at 2116.75. What the futures have been trying to do is, and they got over it, they got over the 2119.25. That's one of the benchmarks. We got to a price point out here of the 2122 area. We came off that area, and I want to show you what we actually did here. So if we take a look at this on a 10-minute, what you're going to see is that when we were pushing into that area this morning, we were doing it on a 10-minute basis with 42,000 contracts. That number, we were going into 92,000 contracts, and that's where the market couldn't handle the higher price. Now, what we have is this. Since February 25th, we've been at these levels. Each and every time that we get up to these higher levels, bottom line, market can't make it up and over it. The bullish part is that you're staying at the highs. The bearish part is that it can't break higher. So we'll see where this shakes out coming into the close today. Coming into this close today is really important. The reason is that the market had every chance and right to bust topside in an extraordinary way out here today, particularly with the DAX being up over 3.5%, 3.81 to be exact. Our markets didn't correlate to that. So bottom line, as we come into this close, what we also have coming into the close is this, is that when we came off the highs this morning, the first leg down into this area of 2112. We got to 2103, but at 2112, you had some juice. So that level there can get tested once again. So this close is going to be really, well, the close is important because of the aspect how the DAX got some juice. Now the DAX itself is way off its highs. But what it has shown on a fundamental basis is that this is all about Greece. This is about the German banks. Bottom line is that the markets were all happy in Europe today when the Greek prime minister said he thought they could get a deal done. Bottom line is that we've heard that a million times. But, you know, what we will see, I suspect, is this, folks. The larger issue right now in Greece is the run on the Greek banks. That's the larger issue. And what has happened each and every day is that the European Central Union, Central Bank rather, has had to put huge amounts of money into the banks in order to keep them solvent, okay? That's the bottom line. There's no sound in the tiger's den. If we take a look at the QQQs, what do we have with the QQQs? This is what we have happening with the QQQs, the NDX 100. Now, the NDX 100 right now is trading at 110.80, and the high out there that was generated is 111.16. Today, your volume is dropping off dramatically. We're going into a 31 million day. We're at 15 million right now. I expect that you're not going to get much more than about 18 million shares. The IWM, now the small caps, what the small caps have done is this. The small caps are trading out at a price point right now of 128.72. Now that's over the highs. The volume is small. Bottom line, though, the small caps are going to have to, the IWM would have to get back inside the 127.13 area. If we go actually take a look at the Russell 2000, the actual indice, the Russell 2000 right now is at 1292, and that is substantially over the highs because 1268, well, it's 30 bucks over the highs. $30 over the highs, and bottom line, it had some juice come in that market on Friday option expiration. What we did have also happen on our option expiration is this, is that when we went south, folks, when we went downtown, you went downtown with huge amounts of volume. The thing that's going to be intriguing out here today is this, is that you have summer trading flat out on Mondays and on Fridays. You should have an expansion, a contraction of volume. What we're going to see out here is that we do have a contraction of volume. What the difference is, as you're going higher, what the difference is that last Monday, as we were going lower, we had an expansion of volume. So this contraction of volume, as you get into higher price, is basically setting up a failure at this at these highs once again. This is Tom O'Brien. This is TFNN. Stay right there, folks. Come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now up $110. You get the Nasdaq up 37. S&Ps are up 17.5. If we take a look at inside the Dow Industrials, folks, what's powering the Dow ahead? You have Merck. Merck is up 88 cents, trading at 58.92. Goldman Sachs is up 310 at 216.29. We have JP Morgan Chase up 92 at 69, and you get American Express up $1.03 at 81.22. Now, Goldman and JP Morgan are at highs. I'm going to bring up Goldman first so you can see what exactly we're doing out here with Goldman. Goldman is coming into the... There we go. Let's put this on a monthly. What you're going to see with Goldman is this, is that Goldman is coming into the highs that were generated out there in 2007. And we're talking about dramatically lighter volume, folks. Okay, it's pretty intense. Now, we're 216.33. The high in Goldman in 2007 was 244. Your next swing right down where we are right now, it's already into it. We're at... let's see. Yeah, we're right at it, actually, which is 215, and we're at 216.33. That was the swing from January of 08. Now, watch this. This is pretty wild. You know, as you go into a supply line, folks, what you're looking for is you're looking for expanded volume, because just you're coming into a supply line, there's huge amounts of supply, and the demand has to overwhelm the supply. Bottom line is that Goldman has been going higher for 4 months straight on anemic volume, and we're talking on a monthly basis, you're talking about approximately 50 million, 55 million, right at that area. That area, folks, is coming into 294 million, 227, 214, 278. Bottom line, you know, you can use a couple different benchmarks. The first one, particularly of where we are right now, would be 215.05. And right now you're at 216.33. If we go take a look at JP Morgan, we pull JP Morgan up. What you have with JP Morgan, that is trading right now at 68.99. That number there is already over this 2007 high. In fact, it got over it a long time ago. The volume there is not quite the same. It's anemic, but bottom line, you're so far away from this 53 area that what you'd have to get first, you'd have to get some kind of a downdraft in JP Morgan in order to basically understand that, okay, does that baby continually want higher price, or will you see something just pull back pretty quickly? Inside the XLE, the oil and gas stocks, folks, still can't catch a bid. You know, oil was flat out here today. What we did have inside the market, inside the oil and gas, however, is that we're up 92 cents. You have 7.7 million shares traded. That's after coming down with 17 million on Friday. And what the oil and gas, what the XLE did on Friday, folks, is this. It broke an additional ABC structure on the way down, broke the B point, 76.19. That B point was established on the 15th of May. We had 8.7 million shares. We blew that away with 17 million shares on Friday. That is a very large ABC structure on the way up. Your A point on this is 81.88. Your B is 76. Well, you get $4. So your C is 78. That targets a 72 area. And the next swing point down, the high of the January swing point is 73.91. The low of that area is 71.70. So it looks like the oil and gas continue to want to trade down into lower levels. Gold contract. What do we have with gold? Okay. So last Thursday, gold had a nice sign of strength, wide price spread, accelerated volume. We got to a price point out here that we did 192,000 contracts, 191,000 rather. We went from 1183 up to 1205. Today we're back down. We're backing down with 113,000 contracts. Right now we're at 1183.40. So listen to this number. This is pretty wild, actually. What you want to see, if you're a bull, is that you want to see gold close over 183.10, and this is why. We've hit 181.60 today. Over 183.10 is how we had gapped up on the 18th, push forward with volume. So that's the first setup. The second setup goes like this. The second setup comes all the way back to the March 18th area. And so March 18th, folks, what we had done is this. Gold had, of course, been continuing down the last couple of years. March 18th on this structure, we hit 1146, hit the low. It rejected the 1146. It blasted up to 1175. It ended up closing out the day at 1152. The volume there is a monster. That 1175 also is going to be hard to break down. If we go, meaning break into, because the volume is so intense. If we go to the GLD, and you take a look at this correlation inside the GLD today has contracted on dramatically lighter volume. The GLD right now is 4.4 million shares. You're going into the sign of strength from Thursday, which had 6.4 million. What you're also doing, though, is this, and that's the benchmark out here. You're going into the, we hit 113.34 today. Right now we're at 113.50. The March 18th area is where we came off the bottom, and we came off that bottom, folks, with 12.4 million shares. So you can see the GLD also is going to need a lot more volume in order to break down into lower price. We go over and we take a look at the bond market, folks. What we're looking at in the bond market is this. I'm going to pull up the 10-year first. So the 10-year right now is trading out down 25 ticks. You get 991,000 contracts. Now the volume is light as we're pulling back, but I suspect what we're going to see is that this is going to go after, once again, the lowest swing point that we have out here. This is an ABC structure on the way down. It already broke the B point. It broke it with volume. turns into a complex ABC. Volume's light today. I expect you're going to see that more than likely. Well, we'll find out whether it picks up tomorrow or not as we try to get into the 125 level. If we go to the 30-year bond, what you're going to see on the 30-year is that the 30-year bond came down today 2 full points and 8 ticks. It did 150,000 contracts. We are at 149.21, and 149.21 does put it under the B point once again. This is also a very large ABC structure on the way down. Bonds you want to really keep your eye on, because what has happened is this, is that last week we had 2, not signs of strength, but we had the price move. We had the price move without the volume. And it's like, okay, a bond's trying to bottom out here. You know, we'll find out pretty quickly. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming back with our man, Mr. Larry Pesavento. Dow right now is up 115. Nasdaq's up 38. S&Ps are up 18.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in 1 index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 113. You get the Nasdaq up 39. S&Ps are up 18.5. And right now we have our man, Mr. Larry Pesavento. Don't forget, folks, every trading day, Larry's got an outstanding show right here at TFNN, 9 to 10 Eastern Standard Time. You can get that programming right on your cell phone, TFNN.mobi. Now, Larry has just started a new service. It's Fibonacci 24/7. What the service is all about, Larry sends out charts, he sends out videos, and once a week he also does a report. That service, folks, this is the last day that you can get it on a test drive for $47 a month. It's going to be $97 a month. The way it works is this. Your first month is $47. It comes with a money-back guarantee. You like it, next month you'll get charged $97. Just this week alone, Larry's already sent out 25 charts, 6 videos, and a report. Pretty amazing newsletter, folks. Larry Pesavento, what's going on?
Hey, Tom, how are you this afternoon?
I'm doing great, man. I'm telling you, I love those charts and those videos, man. They're so detailed. It's amazing, Larry.
Well, Tom, this all started around midnight New York time when the first indications for the German DAX were to be about 170 points higher, which is a huge gap. It's better than 1%. It actually gapped just about 1 3/4 or 1 1/3%, and just continued to run from there. But that was the thing that really started to move, because that caused our futures to gap up about 10 or 15 points. And stay up there all night. And of course the news, I guess, I don't even know what the news did, but I guess it dribbled in here and there. And what I don't understand is people won't buy it when it's down 150, but they have to own it when it gaps up 150. That still surprises me.
It is absolutely wild. You know what is absolutely wild too, folks? There's no doubt. When I woke up, this morning, I saw the DAX up. The bottom line, which is intriguing, is that our futures are up, but in fact, it's having a hard time breaking over that 2119 area.
Yes, it broke it up for just a few minutes. That was the ABCD move of the 5-minute S&P chart. It measured to the 2122.
Yes.
But the most amazing thing to me, Tom, was the NASDAQ. The Qs, the little 100s.
Yep.
They took out the contract high by 1/2 a point.
Okay.
I mean, not even. I mean, you're talking about index at 44.54, and it took it out by 1/2 a point, and then broke 25 points. That's usually not how a bull market acts, but it's just going higher. So what are you going to do? You got to stand aside until you see some further indication. I didn't think we were going to be able to take out Friday's high, given the fact that we closed down 100 in the Dow on Friday after making that slightly higher high. I really thought that was it, and it appears to have to wait one more day. The other thing that I see happening is the New York Stock Exchange Index stopped at the 61% retracement on Friday. Well, today it stopped at the 786 retracement. Again,
okay.
I'm not sure if this is it or not. You got to give it one more day. But
yep.
Tom, between you and me, I've been doing this for a very long time, long before you were in this business. But
yeah.
I've never seen the stock market this bearish, Tom, and I'm the only person that sees it that way, I guess. And I must be crazy in my old age, but boy, it is so clear to me that it's absolutely scary. And I'm lightly short, not a lot, but and I've had some really good runs both up and down here in the past 6 weeks. But I went in Friday at that 2118 level, and saw it break 20 points, and then saw it give it all back today. But I've stayed with it because of the fact that looking at margin debt and looking at where we are historically with this long-term 5-point reverse pattern, the way that the debt market has just gone absolutely crazy. I mean, that's where the real problem lies.
Yes.
Or in bonds and corporate bonds and junk bonds. That's where the real problem lies. Greece means nothing. I don't think that's even a factor. They use that as an excuse, but I don't think it means much. But that's how I see it, my friend. I can't see it any other way. Might have to set with a little pain here, but it looks to me like this is getting ready for some. And Tom, it's not going to end pretty. I can promise that.
Right.
I mean, you look at this and you go back and look at history, and we're going back 100 and some years. I mean, come on, this is how they pump it up, and then look out. So you just got to be careful.
When you're at highs like this, we've been at the same high for 6 months. I mean, I was bringing this up earlier today. It seems that with the DAX, now the DAX is certainly not at highs. That came off the high, but with the DAX up today, 3.8%, the bulls had every right to take this thing right to the moon today.
I would have thought they might still. There's only another 5 minutes to go, or 25 minutes to go. They still might do it. But you're right. The DAX, if you look at the DAX chart, and that's one of the things that I featured this morning in the charts that I sent out, is this is our third type of rally that we've had in the DAX. They've both been exactly equal.
Okay.
And the top today in the DAX, around 11,500, was just about spot on with the exact two retracements were the last time. So it's just completing another leg up in a bear market, it looks like. But, you know, Tom, with the news and the emotionalism that's out there, you know, maybe it's going to go into new high ground, and maybe this is going to be a big leg up. I don't see it that way. You know, I was extremely bearish, as you remember, when I first started doing this show with you back in October of 07.
Yeah.
And we made a higher high. And that was I think it was 5 days after the Skype had went out for the first time, if you remember. And the market rolled over, and, you know, that was it. But,
and folks, during that time, this is what's so wild. Larry and I both were shot up the yin-yang, okay? And this went out, and we're going back and forth saying, oh, no, because if you remember, folks, what had happened is that it had a last lunge, okay, at about 10:30 in the morning, and then all of a sudden it was down like 300 points, right? It was like, oh, my God.
Yeah, it was really, and this is what's going to happen here. I think you'll know that, you know, they slam the doors when you first see the 400-point move in the Dow and the downside, and you're going to see that easy, because that's even not even anything anymore. That's what, 2.5–3%.
Yes.
And you're going to see at least 7 or 8% in one day, because they're going to punish them. You just don't let when you have margin debt the way it is, you know, they just don't let them out that way. I've been there. I've done that. You know, they didn't let me out. Why are they going to let these other guys out? This is not going to happen.
Right. Now,
sure.
I want to switch gears on you for a second, okay? Because you know, yesterday I'm laying down the beach, and we were talking about the stars, and we were talking about the universe, because we live in beautiful Florida, folks, and you should see these stars down here. They're amazing. So there was a buddy of mine down there, and we're talking about him. He says, man, I don't believe in the stars and everything, right? And so, meaning, and the power of the universe, right? Mm-hmm. And this is what's amazing. What had happened is that there's a program right now on Discovery, I guess, folks. And what it's about J.P. Morgan, it's about the Rockefellers and all this.
The men who made yes, that's right, men who made America.
Right. And so he was telling me right before this how much he enjoyed this program. I said, oh, man, I got to watch this program. So I turn around and say to him, right, and you know, like when you have a doubter about just the universe in general, do you know what I mean? It's like, you know, I says, do you know that J.P. Morgan, you know, bottom line, had his own astrologer in his office? And he's looking at me, he says, no way. Right? So can you, I want you, maybe, you know, we only have a couple minutes in this segment, but I'd like to stay on. Tell me, how did J.P. Morgan get into patents and get into geometry?
Well, he was with a lady named Evangeline Adams, who was a astrologer who got into the financial part because Morgan had a fabulous library of old books.
Wow. Okay, just stay there for 1 sec. We just take a short break, all right? Because this is awesome, man, because I know he's listening right now, and we're gonna, I didn't know the whole story, man, but I just knew. I says, hey, his library is still there in New York. Larry Pesavento, Tom O'Brien, we want to hear from you folks. Our phone number is 877-927-6648. We're coming right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We're talking with our man, Mr. Larry Pezzavento, and we are talking about J.P. Morgan. But don't forget, folks, Larry just started a new service. It's Fibonacci 24/7. This is the last day that you can actually get it at $47 for the month. It comes with a money-back guarantee. It's going to be $97 a month starting next month. Larry's already put out 25 charts, 6 videos, and a report. So if you want to take advantage of a great service, folks, check out our front page of TFNN. Okay, so J.P. Morgan, tell me how this came about.
Okay, Morgan's home is right behind Rockefeller Center. You can see the skating rink from his back windows.
Okay.
And it's been turned into a museum many years ago. And if you go into his library, that's the size of a small gymnasium, the ceiling is the celestial ceiling.
Really?
All the celestial stars.
Okay.
And right over his birth sign,
yeah,
on April the 17th, is a secret passageway that he would take it from his elevator down into the library, and that would open right over his birth sign, and he would come in. But his full-time astrologer was Evangeline Adams, and she worked with Morgan because of Morgan's collection of Bibles. He has the best collection of Bibles in the world, even
really?
more than the Smithsonian. And he was heavily involved with that, and his father was. J.P. Morgan Sr. was also involved with the astrology part. He was a 33rd degree Mason also, and J.P. Jr. was not, the one that we know so well, but this was all part of that era, and that's basically how it got started. And he got famous for his quote, you know, millionaires don't use astrologers, billionaires use astrologers. So we don't know much about what Evangeline Adams did for him, but
what a story, though.
Morgan was a pretty sharp guy. Oh, that library is really something. If you're ever in New York and you have some time, you should go to the museum. It's really beautiful, and it's quite nice.
Amazing. So, you know, when we're looking at the patterns when they're setting up, I guess through the years, you know, geometry and sacred geometry, of course, you know, seems to be in everything. You know, who is one of the, you know, market-wise, were there certain people that picked this up first, or was this kind of...
Oh, yeah, no question about it. It was Bryce Gilmore in Australia, Geometry of Markets. There were some other people that did the geometry, Stephen Skinner and John Michel, but the person that related it to the markets the way that it should be related was Bryce Gilmore.
Okay.
He basically showed how the Fibonacci summation sequence is all part of sacred geometry, and that's really what you're looking at, and you're trying to find you know, certain things that are happening. We have one of those in the sky right now. Tonight, Tom, if you get a chance to go up and look at the moon node,
yes,
you know, the quarter moon, you're going to see 2 stars there. There's going to be Venus on one side and Jupiter on the other. It's making a trine, which is a scalene triangle. In other words, the sides are unequal.
Yes.
But it's a trine, which is, in historical purposes, markets are supposed to be pulled up into trines, and of course the market was up quite a bit today.
Okay.
How long this aspect will last, and if it's correct, we're not sure, but that's what we're watching right now.
That's so cool. Well, I'm telling you, I know what those squares are. If you ever get squared, folks, it's not cool. A trine's a good thing, but a square is not a good thing then.
We got a really big one coming up here on the 2nd of July. We have some things that are really powerful with Mercury, and then we also have the full moon at that time also. But, you know, it could be a bottom or a top.
Sure.
Because, you know, we got 8 days, 8 or 9 days to get there. You know, actually more than that, 12 days to get there. So it could be either one, but it'll be pretty exciting. I just look at this, you know, the overbought and the way that people are bullish and the margin debt, and it's just really scary. I mean, I could understand if we were having some wild swings, but we're not having any. Not had any volatility at all.
Yeah.
I mean, nothing. The market moves 200, 300 points. Nobody even cares.
Right.
You know, and this is going to be, this complacency is what's going to get them, because they're going to come in, and believe me, Tom, you and I both know when the door shuts.
That's right.
They ain't going to let people out.
The
that's
door
for
shuts
sure.
and the trap door opens.
Yeah, that's the way the stock market works. As Bernard Baruch said, the greatest scam in the world was inflate prices to a high price. He says you'll get people to buy it all the way down.
You know what's amazing is that, you know, on a I know both of us are technical, but on a fundamental basis, right? Yeah. You can look back, and I don't care whether it's 100 years, and it seems like nothing ever changes. It always happens. People get sucked into the market, they bring it up, they rip it away from them, and it takes so long to get back up again, and then it happens all over again. It's like a mind blow.
It never changes, Tom, and anybody that tries to tell you that it's different this time doesn't know what they're talking about, because it is not different this time. The only thing that might be different this time is that it's a lot worse. Quantitative easing is the nail in the coffin. They just don't know it yet, but that's what's done it. They've increased these debts and stuff. Look at our, you know, student loan debt is one thing, and all the, you know, margin debt, all this stuff. This is not good.
Yeah, the student loan debt. Those poor kids, they're saddled with some big numbers that at this particular point they can't get out of, which is pretty intense.
Yeah, absolutely.
And folks, when you know, this is what's really cool. You know, and Larry's on every morning, 9 to 10, kicks you off right when the market's opening. And what's cool is that when we're talking patterns and when we're talking the universe in general, what happens is that when these, whether it's a trine, whether it's a square, whether, you know, something's happening in the universe, the key is to pay attention. You know what I mean? As Larry's taught us many times, you know, if you're going up, you may go down. If you're going down, you may go up. It's not like there's not like one signal, but it's a signal to pay attention to what's going on, because that's when turns do come in the marketplace.
Well, that's true, and the market usually telegraphs which way it wants to go. Like, for instance, today I was watching the NASDAQ. It's been the leader.
Yes.
It makes a higher high by not even a full point.
Right.
And the index is at 454, and it went to 455,450 as the high. I thought I was looking something wrong with my machine. I thought I'd lost data.
Yeah. Yeah.
And then I looked up, and it was 10 points lower. I said, that's not how bull markets act.
Right. And right now, as we're coming into the close, you know, if I bring this up, what you're going to see is that as NQ, you're going to see, you know, we got a bit of selling, and what happens into this close. So you don't need a lot of selling, folks, because the market should have been able to basically gone topside number one and stayed topside. You know, so you know right now the Qs are the NQs are at 536, and as Larry said, it was 552 was the highs, and it looks like it's going to try to, I mean, someone just jammed in 3,300 contracts, and it looks like it wants to jam down into this 527 area. So it's going to be pretty wild. Well, listen, hey, are you back home yet? Are you?
No, we're still here in sunny Florida.
Great.
Yeah,
great,
we're going to be here for another week, and then we'll be heading home to our little warm area of Tucson. It's about 105 today, so we've had a lot of hot weather since we've been gone, but we've missed it. But we get back, we'll get a little bit of it, I'm sure.
No, that's great. I was looking at that last night.
Yeah, but our 105 is like your 85.
You know what?
It's very muggy here.
But you guys are so funny saying that, man, because when I go out to, and I don't know if it's the same as in Vegas, when I go out to Vegas, man, you breathe and your chest is on fire. Do you know what I mean?
Yeah. Well, Vegas is different than Tucson. Tucson's 2,500 feet above sea level.
I see.
You know, you're below sea level or at sea level with Las Vegas. And, of course, those slot machines weigh the sand down even more. So,
yeah.
what are you going to do?
You got to love it, man. Well, listen, man, thank you so much for the great education. Really appreciate it, and look forward to the show tomorrow morning.
Yeah, thank you, Tom. Have a good day.
Have a great one, man. Have a safe one. And you can get his newsletter, folks. The newsletter service is Fibonacci 24/7. Test drive it. Only $47. Today's the last day you can do it, folks. It's going to be $97. Great newsletter, folks. You'll get an education of a lifetime. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow right now is up 101. Nasdaq's up 36. S&Ps are up 16.5. We're going to be right back.
Larry Pesavento has just announced a new service that is designed specifically for technical traders that follow Fibonacci patterns in many markets and are always on the lookout for profitable trade setups. Larry will be sending his subscribers a constant stream of charts and videos whenever he finds formations and trade setups in the market you need to know about. And each Monday morning you'll receive Larry's written report that provides detailed commentary on the charts and videos that he sent out, as well as what to expect for the week of trading ahead. Larry's first issue will be delivered this coming Monday, and in the days remaining, we're offering a special launch promotion where you can get a full month of Larry's new service, Fibonacci 24/7, for only $47 with a 30-day money-back guarantee. Larry has already started sending out charts and videos to his subscribers that have signed up, so don't delay and sign up now. You can sign up for Larry Pesavento's Fibonacci 24/7 right now by visiting the front page of TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 96. You get the Nasdaq up 35. S&Ps are up by 16.5. And, you know, the bond market's going to be really, that is the thing that you're going to have to watch really closely as these rates continue higher. The market itself right now, folks, has been taking the rates higher. You know, if you need a mortgage out there, go get it, because the bottom line is that we're still at the 2.3 in the 10-year. That's going to still equate to about a 3.8, 3.85 in the 30-year. When we talk bonds, okay, what the very large money managers are worrying about, particularly in the bond market, is that the bids are going to basically disappear. Just coming across the tape right now, this is pretty intense. Now, this is one of the biggest money managers out there in debt, and that is in that bond market. And check this out. TWC Group is taking the possibility of a bond market sell-off seriously. Now, what happens, folks, is that there's when funds are so large, they, just like equity funds, they have to report every 3 months. Well, check this out. So seriously that the Los Angeles-based money manager, which oversees $140 billion of U.S. debt, $140 billion, has been accumulating more cash in its credit funds. The proportion is over the 2008 crisis. Here's the quote of the guy that's running the fund right now. "We never realize what the tipping point is until after it happens," said Gerald Kuzel, TWD Group Head of U.S. Credit Trading. "We're as defensive as we've been since pre-crisis. TWC isn't alone. Bond funds are holding about 8% of their assets as cash-like securities, the highest proportion since at least 1999, according to FTN Financial, citing investment company Institute data. The reasoning is that the Federal Reserve is moving towards this first rate increase since 2006. That's pretty intense, folks. We're in 2015. We're talking 9 years. When you're talking 9 years, you're also talking, almost a generation of new folks into the marketplace that never saw a rate increase. And it's not just the rate increase. What it is, it's the perception of how many more are going to come after that. That's kind of how the market reacts. Reason that the Federal Reserve is moving towards its first rate increase since 2006. And the end of the record monetary stimulus will rattle the herds of investors who have poured cash into risky debt and tried to get some yield. Now, he's talking about two different things here. He has U.S. debt. Now you can see they shifted that to risky debt, okay? And there's no doubt high-yield debt, folks. You will see high-yield debt. Those markets get destroyed. I mean ASAP, too. Of course, U.S. central bankers are aiming to gently wean markets and companies off zero interest rate policies. In their ideal scenario, borrowing costs would rise slowly and steadily. Debt investors would calmly absorb losses, and corporate America would easily adjust to the debt that's a little less cheap amid an improving economy. The outcome seems less and less likely to this money manager as volatility in the bond market climbs. If you distort markets for long periods of time and then you remove those distortions, you're subject to unanticipated volatility. He declined to specify the exact amount of cash he's holding in his funds he runs. Price swings will also likely be magnified by the investor's inability to quickly trade bonds. That's going to be the big deal, folks. What ends up happening is that the bid side of the correlation, meaning when you want to move bonds out, will drop off dramatically. I suspect, inside the Treasury markets, you're still going to be liquid beyond belief. They did drop off, and they will drop off quickly. Inside the corporate bond market, forget it. Bottom line is that if you are in a bond fund out there and you want to stay in bonds, what you should do, I'd move the bond fund out, start laddering treasuries. Every 3 months, 6 months, start laddering treasuries. You keep the treasuries, you'll get your coupon rate, you'll get your money back. This is Tom O'Brien, this is TFNN. You stay right there, folks, we'll be coming right back. Dow Industrials are up 96, Nasdaq's up 33, S&Ps are up 16. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks, as we kick into summer. The 21st, yesterday. It's hard to believe that the first day of summer when it feels like it's been summer for quite a while. This is a quote by Natalie Goldberg. Follow what you love, and it will take you where you want to go. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials up 103, NASDAQ up 36, S&P's up 13.5. Gold contract down $16.70, traded $1,185 an ounce. Silver up 6 cents at $16.17 an ounce. Platinum down 22 at $1,062 an ounce. You have copper flat at $2.57 a pound. Light sweet crude also flat at $60.17 a barrel. Bonds. The bonds toasted, roasted, all of the above. You had the 10-year down 28 ticks, 125.22. 30-year off 2 full points and a half at 149.15. King dollar up 253 ticks. Excuse me, folks. Trading at 94.52. The euro is down 14 at 113, and the yen up 67 at 123.67. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. We start with the SPY. What you're going to see out here, folks, you get a failure on price, on volume. The SPY today hit a price point of 212.59. Now, mind you, okay, Europe today, folks, was up big time. We had the DAX up 3.8%. The Spain was up 3.8%. France was up 3.8%. And you had the FTSE up 1.2%. Bottom line, our own markets couldn't handle price. Our markets were up, no doubt. We had the Dow Jones up 0.5%, the S&P up 0.6, and the NASDAQ up 0.7. We go over to the SPY, and you take a look at the SPY. This is what you did. The SPY today got to a high of 212.59. You did 67 million shares. You closed at 211.89. And you can just pick any swing point you want to look at, folks. Each and every one of them failed on price, failed on volume. We are still at the highs that were first generated out here on the 25th of February. If we take a look now, let's go take a look at the cash S&P, because the benchmark on the cash S&P, we are over that. We are at 2112.31. The benchmark I'm using out here is the 2119.59. So bottom line, I do want to see that get back inside that level. You're over that level. That benchmark was the first high that was generated out here on the 25th of February. The market thus far has only closed over that for 4 days. This will be the 5th day that it closed over that. The first 2 times up, the market couldn't hold into the close. The days that we did close over that level were on the 18th, 19th, 20th, 21st, and 22nd of May. Now, if we take a look at this correlations, and this is where this is going to really get cool, so watch this. So the SPY out here today, when we take a look at the SPY did 67 million shares. And if we're going into the anemic, up even at those highs, which it couldn't hold, this is pretty wild, because the high that was generated out there on those 5 days that it was over still had more volume, which is crazy, because we had 74 million on the 19th. You had 76 on the 20th. You had 64 on the 21st. And you had 57 on the 22nd. Then you fell off that high, and watch. You fall off the high. You had 124 on the way down. You get lower. You had 151 on the way down. Bottom line, folks, it can't hold price. We take a look at the NDX 100. We'll use the 3 Qs looking at the NDX 100. The NDX 100 is over the level. You know, the NDX 100, the high of the NDX is 111.16. We hit 111.01. The benchmark, however, that I want to take a look at is the 109.42. The volume died in the vine, no doubt, just like it did in the marketplace. Died in the vine. I'd first want to see the NDX 100, the 3 Qs, under 109.42. That is the high that was generated out here on March 2nd. The volume was anemic out here today on all the indices. We did 657 million versus 1.8 billion on the way down on Friday. On the NYSE, we did 1.6 billion versus 2.4 on the NASDAQ. Small caps, bottom line, small caps are still hanging at highs out here. If we take a look at the IWM, what you're going to see, IWM went to a new high out here today. Volume dead, but bottom line, you're at that high. The actual Russell 2000, the actual index, also is at a new high. We're at 1292. Gold. What do we have with the gold market? What you have with gold is this. Gold market pulls back today into its sign of strength from Thursday. We are at 1185.30. We did 116,000 contracts versus the 191,000. I suspect what we're going to see, they're going to, I suspect, put some pressure on, a little more pressure, but bottom line, you back down, and you did back down with lighter volume. We are at this 1185.30 area. That closed above the 1183.10, that's where we broke topside from last Thursday. What you're also going into, which is game here, which is the 1175.10, that is the high of the March 18th low. That's where we came off the bottom. That's where we initially came off the bottom. So that is game. We go take a look at the bond market. What you have with bonds is this. Bond market is what you want to, we're really going to pay attention to in a big way. So first we start with the 10-year. The 10-year bond right now, that traded down 27 ticks. You did 1 million contracts. Now, 1 million contracts in the 10-year, folks, is light volume. I suspect what you're going to see, though, is that the 10-year is going to try to get into now the 125.12 level. That's only a half point down from where we are. What the 10-year did do, because the 10-year, the 30-year, the TLT, they're all in ABC structures on the way down. The 10-year got back in the lower range today. The 30-year also got back in the lower range. The 30-year come down hard. Now, it didn't have the volume also. We came down 2.5 points. 30 years at 149.15. It's in that lower range, though. The TLT, the 20-year bond plus ETF structure, that also is in the lower range. Anything under this 118.13 is in the lower range. It already broke a B point, broke it with volume. That sets up a 110 TLT. Right now we're at a 116.65. This is Tom O'Brien. This is TFNN. Stay right there, folks. Coming right back. Dow up 103. NASDAQ up 36. S&P's up 15. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finished up 103. NASDAQ was up 33. S&Ps are up 15.5. Inside the Dow Industrials, folks, what was putting strength into them today is that Goldman Sachs was the leader. That was up 332. Goldman is going into its 2007 highs with only 10% of the volume on a monthly basis. So Goldman is pretty intense. How it is continuing to move higher, but bottom line, no juice whatsoever. When you go into a high with only 10% of the volume you had last time, I mean 90% less, that baby's not going to hold. Merck was up 79 cents. American Express was up $1.06. That's a dead cat bounce. JP Morgan is at highs. That was up 88 cents. Taken away from the Dow Industrials, putting pressure on it. You had Cisco down 9 cents. Procter & Gamble was off 9. United Health was off 8, and ExxonMobil was down 4. So you can see the laggards inside the Dow weren't down pennies. That's all they were down is pennies. What's amazing is that the Dow was only up 103 points, 5%, when in fact the ones down were so dramatically lighter. Inside the NDX 100, what we had is this. The leaders out there, you had American Airlines. That was up $1.47. That's a dead cat bounce. That's been getting killed. Adobe was up $2.58. You had Netflix up $17.80, and we had Facebook up $2.23. Taking it away from it on the way down, meaning the NDX was up, but you had the laggards in there was Wynn Resources. That was Wynn Resorts. That was down $2.16. We had Symantec off 25 cents. Tesla was down $2.72, and Green Mountain was off 78 cents. If we go take a look at the XAU, or first off, I'll look at the GLD. So as the GLD pulled back, the contract itself, folks, had pulled back on lighter volume. When you take a look at the GLD, you'll see exactly how much lighter volume we're talking. It's pretty dramatic. The GLD pulled back $1.48. We did it on 5.6 million shares versus 6.4 million versus, and this is the big number, it hasn't hit it yet, but the GLD and the gold contract in general is going to need some monster volume in order to break the last established low out here that was in March. The high of how we came off the bottom on March 18th is 112.87. Now we hit 113.34 today, so you didn't hit it yet. That level, though, where we came up is 12.4 million shares. Today we did 5.6. You can see that it just doesn't have enough juice as we get down into that level. Not enough sellers. If we take a look at the XAU, what you're going to see, XAU pulls back today. We're at 65.60. And the low that it's going after is a 65.43. I suspect it's going to more than likely spike that level tomorrow. And same benchmark day, the 18th, that's where the 18th, let me put this volume underneath this so you can see the type of volume that we're talking about, even in the XAU, 18th. So 34 million shares. That's what they're talking, and the XAU doesn't do 34 million almost all the time. The HUI, the Gold Bugs Index, what we have with the Gold Bugs Index is this. The gold bugs index is trading at a price point of 153.98. That level at 153.98 is also coming into the March sign of strength. That low there is 156. 150. Oh no. Okay. Well, that's interesting. It's below the 156. We're at 153.98 right now. That would come into Thursdays is 152.70. So 152.70, and the low that was established in March is 154.46. So we're below that low. We're going into the low that was established in March. Okay, we take a look at some of the high volume stocks in this low volume market. This is what we had out here today. You had the Bank of America. Oh, we're going to look at Bank of America too. Bank of America was up 30 cents. We had Micron up 16 cents. Micron's going to be coming out with numbers in the next few days. Qualcomm was up 48 cents. We had American Airlines. That was the dead cat bounce, up 142. Big Blue. Big Blue was up price point of 74 cents. International Paper was down 147. If we go over to International Paper and we take a look at it, this is another equity that is making its way down to the October 2014 swing point, okay? The high of the October 24th swing point is 47.13. And what we just did out here today, let me bring this back for you, you can see how this is checking out. The amazing part, folks, is that even with markets at highs, this October 2014 level, one after the other, these stocks are marching down to it. The October level in International Paper is 47.13. Today we hit 48.71 off the high that was generated out here in February of 57. And that's on the weekly. On the daily, what you're going to see is that you broke down, and we broke down with some real volume. This little baby on the daily basis looks like it's going to, yeah, well, on the daily basis, go in the same place. It's going the same place. It's going there, but this is a monster break as it went downtown. Now, dollar index. We take a look at the dollar index, and this is counterintuitive. There's no doubt. When you look at the Greek crisis, on a fundamental basis, it makes 0 sense that the euro wants to go up and the dollar wants to go down. Okay, there's no doubt about that. Technically, what we have is that we already have an ABC structure that wants to go test the 93.47 level. That was the level that was established on the 15th of May. So we'll see how the test comes in. If, in fact, we get what we'd be looking for there is 56,000 contracts, folks. You know, so we'll see how it shoots into that level. The Greek banks, bottom line, every single day, we're talking about every day now, the European Central Bank has to get money into those banks so the citizens that are taking money out of the bank hand over fist, so there's money there. The amazing part, when you look at that context, is that that is not the news. You have one little line is coming across. You know what I realized, that this is really wild, folks, okay, is that when you see a crisis like this, right, the financial news, including Bloomberg, you know, Bloomberg is normally they don't really try to pick sides. But what I've noticed even on the Bloombergs coming across, right, they're not really explaining. You don't have the writers explaining exactly what's going on with the banking structure itself. And flat out, what is going on is that the banks don't have enough cash for their citizens coming in, taking the cash out. And why are they taking the cash out? They're taking the cash out just in case that a default does get in place. And it has to do with capital controls. So if you remember what a capital control is this, is that the European Central Union would come in and tell the Greeks, guess what? You only can take now, whether it's $130, $200 euros, 500 euros out per day, per whatever. Bottom line, folks, okay, they're feeding those banks to keep them alive. I suspect that's going to happen. Is that going to save the Greek? No. Bottom line, you're going to see a kick down the road. We're going to be right back, folks. Stay right there.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finish up 103. NASDAQ was up 33. S&Ps were up 15.5. The VIX is back at 12.74, which is just amazing, no doubt. As we do each and every Monday at 20 past the second hour, we have our man, Mr. Kevin Hinks from TD Ameritrade Thinkorswim. Kevin, folks, does the best option show on the planet. It's right here every Tuesday, noon to 1 Eastern Standard Time. If you haven't test drove the Thinkorswim platform yet, by TD Ameritrade, folks, come over to our website at TFNN. You're going to see the banner on the top, on the side. You can hit the banner. Bring up the exchange. They'll put, you can trade with it with paper money first, and it doesn't matter whether you're trading options, futures, currencies, or equities, folks. It's all on one platform. Awesome platform. Don't forget, Kevin's on tomorrow, 12 to 1 Eastern Time. Kevin Hinks, what's going on?
Tom O'Brien, happy Monday, buddy. How's everything?
It's going great, man. There's no doubt. I mean, it blows my mind that the market didn't go to the moon today after the DAX went to the moon, but guess what? We didn't.
Yeah, you know, this rally had a feel of a big relief rally, doesn't it? Even though everyone has to admit Greece is not out of the water. They're not out of trouble yet.
Right.
So who knows? It's like that bar, Tom, that says free beer tomorrow. Right?
Yeah.
Not today. Free beer tomorrow.
Yeah, that's a good analogy, man. That's absolutely a great analogy. You know, when we look at the option market, you know, we've been talking about, you know, we've had penny-wide spreads for quite a while. What's really intriguing is that because we're at such high prices, it seems like whether you're bullish or bearish, you have even better situations for the amount of defined risk that you can put up. I mean, because we're running at 18,000 in the Dow, and some of these Dow stocks are running, $100, $150.
Yeah, a lot of guys in my position that used to be floor traders.
Yes.
We really stopped being on the floor because it used to be, the individual investor got to pick what he wanted to do, and we'd make our money off the edge on each trade, the bid and the ask.
Right.
But now the bid and ask is so tight, you guys get to pick and you get to do it for fair value.
Yes.
So the edge is actually flipped over to the customer side.
Right. It's pretty amazing, too, when you actually look at it. I was listening to your show last week, and it was great information about the aspect of making sure that there's liquidity inside the options.
Sure. Trade liquid names. Absolutely.
And what was interesting, Kevin, is that last week I was it was BG, okay? And that what's interesting, folks, is that Bungie is a liquid stock, okay? It trades 500, 700,000, a million some days. But bottom line is that I had to go short the equity versus the option. And I happen to be listening to you simultaneously because there's not enough options traded in it. So it was really cool listening to that.
Yeah, we talk about the number one thing you should look at is liquidity. Make sure you can get in and out of a trade without costing you too much slippage that could take most of your profits away.
Right, and
stay away from those names.
And folks, TD Ameritrade, Thinkorswim, they're so huge on education and on strategies. And it was so cool because last week, because what does happen is this, folks, is that they'll always let you buy it. It's getting out of it. Right? I mean, there's always something.
There used to be a term on the floor, Tom, called the Roach Motel.
Okay.
We let you in, but you can't get back out.
Yeah. And I can see it. I was, and what was so funny about that is that, it's $92, and I'm saying to myself, oh man, I could get something right at the money for like $1.40, and then I was looking at the spread. I'm saying to myself, this doesn't work. It's $1.40, $1.65, and I says, guess what? And what does happen, just so you know, folks, okay, that they know how many options are out there, man. And when you're trying to get on the other side, even if they're in the money, well, guess what? The spread's going to drop off on the bid side. So
Right.
Yeah.
They're going to charge you getting in. They're going to charge you getting back out. And you've got to be perfect in that case.
Right.
To make it profitable.
And there's no reason to. That's what even when I was listening to the program, I said, listen, okay, we get 500 stocks out there at least that, have some real action on them.
And I guarantee you, whatever sector you want to trade in, there's some stock that's liquid enough for you to get exposure in that sector.
Yeah, there's no doubt.
You just got to find it.
Exactly. And, folks, don't forget, as you come over to our website at TFNN, when you bring that up, Kevin, all the folks over at TD Ameritrade, Thinkorswim, they have swim lessons every day. I mean, and they're amazing lessons to really understand, number one, what type of a platform this is. The platform itself, Kevin, is phenomenal, man.
It's the best I've ever seen. That's why I came here.
And when you see what it can do, folks, I mean, it's so crazy. This is pretty cool. So I've been on this platform, I think I'm pushing 12 or 13 years, right? And when I actually saw you and one of your colleagues at the Money Show going over it, I didn't even realize how much it actually did. Isn't that crazy?
I tell people all the time, Tom, if you touch 15 to 20% of what you can do on this front end,
right,
you're doing a lot. That's a lot.
Yeah.
And so you can do, if you get, really all you need is the basics, but you can get as involved in all the technicals or whatever you want as you can. We used to pour over data on the trading floor for days and hours trying to get the same information that you get at a point and click.
I know,
in
man.
5 seconds.
It's unbelievable. It really is.
Yeah.
So what are we going to talk about tomorrow?
Tomorrow we're going to do two things, Tom. First we're going to do is I'm going to quickly break down all the 4 important Greeks.
Okay. Awesome.
When we trade, we're going to go over, make sure everyone knows them, and then we're going to get into some summer trading.
Oh, yeah.
What's the right thing to trade in the summer, right? You got low volatilities. You've got a couple of these names that are moving, but they're still trading. The options are trading at 52-week lows.
Yes.
So we're going to figure out some good trades to take advantage of the low Vega and take advantage of positive theta.
And folks,
calendar spread.
Yeah, and folks, what Kevin's talking about is so important. And this is what happens, unfortunately, for all of us, right? Is that, Kevin, what I've seen over the course of years is that, the retail trader has more time in the summer, right? And so they're in there more, and they have to know that, sometimes you just can't, you have to take off, man. You know what I mean? It's just like around holiday trading.
Sometimes things don't line up.
You're right. And so, listen to the program, folks. Because you'll keep the discipline, you'll get the discipline, and you'll understand the strategy, okay?
Right.
And it's really cool once you get it, because I know, like everyone has a job, and then you get a week off, and you think that, okay, particularly around July 4th, you say, okay, I want to trade. And the bottom line, folks, is that most of the time is not the time. Do you know what I mean?
Because if you're taking time off, guess what? So is the trading community.
Yeah, no doubt, no doubt. Well, listen, man, we really appreciate the great education every day with the swim lessons, and of course the great program every Tuesday, Kevin.
Looking forward to it, Tom.
Okay, man. Have a great one. Have a safe one. We look forward to the program tomorrow.
Have a great day, buddy.
Thank you, man. Have a great one. Bye-bye. And, folks, if you haven't traded options, don't be scared of them, because the bottom line, you can get on here, you can listen to the program, you can open up the account at TD Ameritrade, Thinkorswim, and paper trade. Paper trade for a month, paper trade for 6 weeks, and then you can just do one spread. You can do, one contract at a time. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. You stay right there, folks. We're coming right back. The Dow finished up 103, NASDAQ up 33, S&P's up 17. We'll be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And, we take a look at China, folks. Okay, you got to listen to this number. This is pretty intense. In China, first off, in March, there were 4 million new broker-dealer accounts opened up. If you take a look, first I'll put the chart of the Shanghai and the Shenzhen up for you. And what you're going to see is that, you talk about volatility, man, oh man, I mean, pretty intense. We had come down last week before they went on vacation, 6.42%. You come off the high. The high that was generated in China is 51.78. Right now, you're at 44.78. When you take a look at this correlation, this is the second time that we came off this high. Now, I wouldn't be shorting this right here. This is why. We did come down with lighter volume. We had done on the 19th, that's the last day this has been open thus far, we did 45 billion shares. That 45 billion, however, is going into 78 billion. So that's saying that more than likely you're going to get another bounce. On the bounce, if in fact there's light volume on the bounce, then the baby's ready. The reason I'm saying that is that when you take a look at the expansion contraction of it, what you're going to see is that when we actually did the first break down on the 28th of May, that was a break and it got outside the channel on the way up. That's what it actually did. So once you're outside the channel on the way up, that sets up run to 3,300, okay, which is incredible. Okay, so now that's the technical take. The fundamental take has to do with 4 million new accounts in March. You had a push forward that was dramatic. But listen to this number. This is the big one. Now, this just came across the tape. The biggest tumble in Chinese shares since 2008 is proving especially painful for margin traders as their favorite stocks sink faster than the benchmark index. The 30 equities in Shanghai with the highest levels of margin debt relative to the tradable shares have dropped 17% on average since June 12th versus the 13% decline in the Shanghai. Margin positions on the cities fell for the first time in a month on Friday, a sign that the leveraged investors are unwinding bets after they grew more than fivefold in the past year. With at least, look at this number, this is a great number, with $364 billion of borrowed money riding on the stocks in Shanghai and Shenzhen, losses on these positions threaten to magnify the market declines as, of course, traders sell shares to meet margin calls. China's benchmark index tumbled at the fastest rate among global equity gauges last week after a world-beating 152% gain in the previous 12 months. Bottom line is that they went up the fastest, too. One of the money managers over in China said this is a self-fulfilling prophecy. What it is, folks, it absolutely is self-fulfilling in the aspect once the selling starts. Shanghai Construction Group, with a margin trade ratio of 34%, has retreated 19%, pairing gains over the last year, of the past year, to 243%. Some of these companies, folks, are up so much money, it's just really amazing. What we will see is this, though. The way Shanghai trades, and this is going to be important for our own markets. The reason being is that Shanghai, even here, watch, I'm going to bring this up in 2007 so you can see how this shook out. Put it on 3. So Shanghai, for some reason, loves to trade. The trends are so dramatic, it's unbelievable. So if we bring this back, I'm going to bring this back 15 years. And what you're going to see, the trend that had started in Shanghai in 2005. Shanghai was only at 1,000, folks. It was at 1,000. So I want to start at 2005 because, it moved up, into, let's say, 2006. Well, 2006, we're at 1750. It was a rocket ship. And if you want to see what a rocket ship looks like and then an implosion, that was Shanghai. So we went from a price point of 1753 in 2006. That was October of 2006. By October of 2007, we were at 6,100. So we went up 500 or 400%. As you got up to those levels, let's put the volume underneath this so you can see how this whole thing shakes out. As we got up to those levels, bottom line, doesn't matter what market, what time, what price, bottom line, volume died in the vine. We had been going up with 288 million shares, a billion shares rather, on a monthly. You made the high with 126, so it was half the amount of volume. Then what ends up happening? That was October of 07. By October of 08, you were already back down to 1664. What is amazing there is that it was a match both ways, meaning on the way up versus the way down. Okay, so that being said, when we take a look at where we are right now, this marched forward in an amazing way. The thing that's going to be intriguing is watching how this shakes out. You know, we were talking about Larry Pesavento, and Larry's got a great new newsletter. And Larry is the patent king. There's no two ways about it. And the name of his newsletter, folks, is Fibonacci 24/7. What Shanghai has done is this. You know, when I was first looking at Shanghai, I said, hey, man, you know, this can hit the high. It really got up to that level. Then looking at it, however, you know, we hit 5178. But when it hit 5178, it couldn't hold. Well, 5178, folks, is a 0.76 of the whole move. Now, what that means is this. That means that you start moving higher. Fibonacci-wise, you did a 0.786 of the whole move. When you see something back off like that at 0.786, like, okay, hold on, man, that's a good place to set up trades. As I said earlier, what I would do, I would let it come back and bounce, because I suspect you're going to get some kind of a bounce out of this. As it gets up to that level or close to that level, that is going to be the setup to basically pull the trigger. And we'll see, in fact, the next segment, I'll get a few ETF structures because there's plenty of ETF structures that you can trade that Shanghai off of. And all the ingredients are here, meaning the ingredients that if you saw the special on CNBC a couple weeks ago with the special on CNBC, and this was one of the most bizarre ones I think any of us have probably seen, is that they had a picture 3 hours outside a major city, beautiful TVs inside, you know, a couple little nice concrete buildings with all farmers. It's a farming community, and they had a queen bee there that has made a lot of money in the market, and she was the queen bee. Bottom line is that farmers were placing bets with their stocks, you know, versus farming. That in itself does what? That in itself that's the typical deal in any society. And that's exactly how we were in the United States. There wasn't anyone that was not into the market. It was really hard to find someone that wasn't into the market because it went up every single day. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming back with a couple of those ETFs. Dow finished up 103. NASDAQ up 36. S&P's up 17.5. We're going to be right back.
Larry Pesavento has just announced a new service that is designed specifically for technical traders that follow Fibonacci patterns in many markets and are always on the lookout for profitable trade setups. Larry will be sending his subscribers a constant stream of charts and videos whenever he finds formations and trade setups in the market you need to know about. And each Monday morning, you'll receive Larry's written report that provides detailed commentary on the charts and videos that he sent out, as well as what to expect for the week of trading ahead. Larry's Larry's first issue will be delivered this coming Monday, and in the days remaining, we're offering a special launch promotion where you can get a full month of Larry's new service, Fibonacci 24/7, for only $47 with a 30-day money-back guarantee. Larry has already started sending out charts and videos to his subscribers that have signed up, so don't delay and sign up now. You can sign up for Larry Pesavento's Fibonacci 24/7 right now by visiting the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking China and, the bull or the bear, okay? If you happen to be traders out there, bottom line is that if we take a look at, first you can YANG. If you take a look at the symbol YANG, what the YANG, folks, is that this is the bear position. This is the direction, 300% correlation inverse of the FTSE China 500 index. Bottom line is that this little baby right now is trading out at 63.82, and it's a liquid stock. That's the bottom line. So that's one you can look at. YINN. This, if you happen to be a bull and you're waiting for pullbacks and you want to buy that baby, this is the 300% bull position. That is trading out at 47.89. This also is liquid. This runs about 400,000 to 500,000 shares every day. So we'll see how those babies shake out. And if I look at the Shanghai in general, bottom line is that we'll figure out. We'll get as to when that baby is going to open back up today. AMBA. This is a stock today that took a beating, and what we have, this is a compression stock, I believe. Yeah, it's a high definition video compression, imaging processing, semiconductors. The high for the year is 128. The low is $27.50. This came down with a vengeance, and we're down $24. This baby, if we take a look at this and we put this on a weekly basis, what you're going to see is that this is making its way. This is going to be pretty intense, actually. This came off the high with volume. In fact, the volume is so high on this The weekly volume, we just started the week, folks, okay? The highest weekly volume this has ever had is 30 million. One day we did 24 million. This is going to blow apart. This baby wants to get into 68.50, and right now you're at 94.36. Let's see what they had to say. Okay, so it fell as much as 16% intraday. After Citron Research public negative report on the Customer GoPro. Oh, Customer GoPro, GPRO. Oh, let's look at this. GPRO. I got to look at this for a second. So GPRO, they must do something for GoPro. So GoPro is down $3. Put this on a daily. You're at 54.92. Put this on a weekly. Okay, so GoPro's off its highs of 98. You're at 54. Yeah, the way GoPro is trading right now, I wouldn't be short in GoPro just yet. And this is why. You have a short interest of 16.53%. That's enough. That's almost 1 out of every 5 shares have to get bought back. You have a float out there of 89 million and 11.3 a short right now. So this baby is not ready yet. I suspect what we probably have there is that company probably does some type of video compression for it. That's the way it seems to be set up. Tomorrow morning out here, what you're going to be looking for, even tonight in Asia, bottom line, I suspect we're going to get slightly lower markets. The DAX, the FTSE tomorrow, that's going to be a big number, folks. Bottom line, markets out here failed. That's the bottom line. They should have went through the roof today. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. Grab it and have a blast with it. Thanks for being here. I look forward to speaking to you right back here tomorrow. Go get them, folks.